Hello dear traders, welcome to Insta TV. You're watching daily financial news with me, Anna Kasatkina. On Friday, traders are absorbing worrisome news from the US. Above all, trading sentiment has been affected by the news about a brief shutdown in the US government and other state-run organizations. The US Congress failed to meet the deadline to approve a two-year budget deal. This worsens political uncertainty in the US. Besides, equities on Wall Street suffered another plunge yesterday. The massive sell-off in the US stock market is raging on amid mounting expectations for higher inflation. As a result, other global financial markets are on track for their worst week in years. The US stock indices incurred heavy losses yesterday. The S&P 500 shed 3.75% in the North American session to close at 2,580. Dow Jones Industrial Average plummeted by over 4%. Nasdaq Composite weakened 3.9%. Asian markets are trading much lower. The Shanghai Composite dropped almost 6% and Japan's Nikkei and Topix tumbled 4%. That has been the record slump in the recent 7 years. China presented a consumer inflation report which discouraged investors. China's consumer price index increased 1.5% in January from a year earlier, in line with market expectations. However, the annual rate of consumer inflation slowed down to a 7-month low. Month on month, China's consumer price index grew 0.6%, lower than the forecast for a 0.7% gain. Besides, the producer price index eased for the third straight month. The factory inflation rose 4.3% in January, compared with a 4.9% increase in December. To sum up, China's macroeconomic data came in worse than the consensus. The downbeat statistics increased pressure on the Australian dollar. The Australian versus the US dollar pair is now trading near 0.7776. Meanwhile, the US dollar is trading under pressure as the US government has shut down for the second time this year. And that is all for now. Thank you for watching and see you back soon.